I'd like to introduce Tim Hand. Tim worked at Kraft Foods for 17 years across a number of categories and brands. He managed the Canadian Kraft Foodservice business. He was also head of strategy and business development for the $2 billion North American food service division. So welcome, Tim. Joining Tim Hand is another partner from Kinetic12 Consulting, and that's Bruce Reinstein, who prior to joining Kinetic12, Bruce was the president of Consolidated Concepts, where he worked on a customized solutions for emerging and national chains. Prior to that, he was the co-founder and president of Fresh City, a 2002 Hot Concepts Award winner. Most importantly about Bruce's agenda and resume is that he has a bachelor's degree from the most prestigious and the best hospitality school in the entire world. That, of course, is Cornell University in Ithaca, New York. And no, I'm not biased whatsoever. Tim and Bruce, welcome.
Thank you, Charlie. It's good to be here with you, and welcome everybody who's on today. So Kinetic12 has spent the last 15 months evaluating and making predictions focused on our industry and the tough road, which has resulted in a major pivoting. Today, Tim Hand and I will look at defining the future of food service. So who's defining the future of food service? Well, it's emerging and growth chains. That's what we have looked at. The restaurant of the future will look quite different, and these chains are actively making adjustments. So understanding what these operators are doing and adapting your capabilities to support them will help you become much more successful as we move forward. So our industry is changing. Initially, changes were taking place from a defensive posture. We were reacting to what we didn't know. Now a proactive approach to what we do know is taking place. These emerging and growth chains are backing off all scratch, reducing the size of their footprint, and riding the so-called off-premise train, which is increasing average check. So again, our industry is changing, and labor has become a major factor in this. The food service industry has had labor issues in the past, but now and for the foreseeable future, it will continue. Kinetic12 surveyed 80 chains from our emergence group, and the top 2 business issues focused on labor, no surprise. And this is very, very current. This survey took place over the last few weeks. So it really starts with the operator mentality of doing more with less. But beyond that, it is about making critical adjustments to their brands to simplify their operations. So Tim, off to you.
Yeah, thanks, Bruce, and thanks, Charlie and IFMA. We are excited to be part of an IFMA webinar again. So let's look a little bit more at the changes of the industry. We're not going to spend too long on this because everybody knows we're in the midst of change, but one of the most significant changes coming out of COVID is the dramatic increase in off-premise in all of its various forms. And as we talk to the emerging and growth chains, this is clearly something on their minds, as it is for every chain. You know, they've been investing in menus that can travel better, investing in technology to enable better ordering and manage delivery. There's clearly a paradigm shift in packaging where it's moving from a cost to be reduced to an opportunity to invest in to create differentiation. I think we're only just starting down that path. That's going to be years in the making. It's also impacting the design of restaurants, as emerging chains have told us. Their future footprint is going to be smaller because as the off-premise percent of their business increases, they don't need as much space. We'll talk about that a little bit more. So this is definitely one of the biggest changes we're seeing coming out of COVID, one of the long-term changes. One of the other changes we've heard as we talk to emerging chains is virtual brands. Now this is a picture of Red Robin. They're not in our emergence group. We're going to talk about that in a minute as well, but they're a good example of virtual brands. And this is an interesting phrase that wasn't really in our lexicon pre-COVID. but just about every single chain we've talked to is either launched or is in the process of launching a virtual brand. And so why? Clearly, as COVID hit and volume dropped, they wanted to make better use of their kitchen, and they only could do it online. So what better way to do it? And so, you know, as Red Robin's example shows, they're expanding into logical other categories. So if you're a burger chain, they're expanding into chicken and wings and salad bowls. As we've heard from some of the chains, this has driven a 10% increase in their top line, which is pretty phenomenal, because if you went to them and said, hey, I'm going to launch 5 new menu items and I can drive your top line by 10%, they probably wouldn't believe you. So it's hard to say whether this is going to be a long-term thing or it's more of a flash in the pan, but very interesting development. As Bruce and I have been working over the last year on, you know, looking at the impacts of COVID and talking to operators, we created this structure we wanted to show you, as simple as it is, to kind of frame out the world we're living in now. And we talk, you hear the phrase new normal, another new phrase into our dictionary. We see the new normal as the COVID new normal. Sometimes people refer to it as post-COVID, sometimes the world we're in. We see it as 2020. And through the first quarter, we've moved into what we're calling a transition phase, which we think, based on everything we hear, will last a year. Excuse me. And then starting in Q1 next year, we're going to move into the new normal. And so, you know, when you're in the middle of a kind of a revolutionary time in the industry, it's hard to see it. But we are all living through kind of dog years right now, right? We've all got 7 years experience in the last 12 months. And as we look back at this time, we think you can look back at it as 2020 was the COVID normal, 2021 was the transition. And so, as you know, great strategists and futurists as we all are, our job is to try and to analyze the situation to see how the industry is going to evolve and change going forward. So let's look a little bit more at how emerging chains are impacting it. Bruce?
So I guess first and foremost, what is an emerging and growth chain? And what we looked at is the fact that it was somewhere between 20 and 300 units. And these brands are unique, compelling, entrepreneurial, adaptable, and influential. Maybe not all of them, but they have certain aspects which allows them to have the opportunity to grow once COVID is done. So in 2021, we introduced Emergence. And so again, it's not emerging chains necessarily, it's emerging chains and growth chains. And of course, in today's environment, change is happening at a very rapid pace. Clarity comes from emerging and growth chains who are open to learning what others are thinking and doing. It also outlines the needs of these operators and the capabilities and differentiators that they are looking for from their strategic partners. So they are open to change. The next slide actually shows some of the 80 operators who have been engaged in Emergence. This group is comprised currently of 80 operators, but growing very quickly. These are groups and operators who are looking to be successful in what we're calling the next normal. And they're not afraid of change and are actually embracing change while maintaining their standards. Tim, back to you.
Yeah, so how are growth in chains and emerging chains different? What are their advantages? You can see a few pictures on here of one of the chains. It's a good example of an emerging chain, 100-unit Duck Donuts, named after a town in the Outer Banks in North Carolina. Small chain started up. There's no donuts there. As it grew to a few chains, they got a bunch of requests for franchising, and they've grown to 100 units. So good example, picture of Russell, the founder. So what about these chains? What are their advantages? I mean, clearly they're growing. That's an advantage, I suppose. But their standards are personal. Clearly they have this entrepreneurial culture. They are much closer to their operation. They can gather data. The management is kind of in there more. They're nimbler. They're more adaptable. And so they've been able to kind of pivot faster through COVID. really good relationships with their suppliers and fantastic loyalty, stronger loyalty from their employees. And although they all profess to have this better employee culture, culture is kind of a fuzzy thing, but generally they have, the smaller chains tend to a better family atmosphere and good relationships with their franchisees. And so clearly they have advantages. What we want to do now, I'm going to pass it back to Bruce, is drill into a couple of reasons why we think they are so different. And so remember, our premise here is that these emerging chains and growth chains are having a disproportionate influence on the industry, right? So why are they so influential? It's because they are two things. They're unique in their concepts. They've created a concept that resonates with consumers. It's different. They're aggressively entrepreneurial. So let's look at those 2 points a little further.
So the fact of the matter is as Tim mentioned, they are unique. So what does that actually mean? I think every restaurant operator would say that their organizations are unique. The way that we look at it is the attributes of the brand stand out and are proven, tested, and tweaked. They're creative menus. They're with bold and innovative ingredients. They don't have to be what's expected. They're actually expected to be different. They have evolving designs and layouts that are their own. They're not confined to what is expected. And then lastly, they're quick to modify and adapt. If something is not working, or there is a better way, they will adjust. And then as far as culture goes, leadership doesn't talk about culture in these brands. They are actually connected to their teams, and they are the models of their brand's culture. So it all starts with leadership. And they want to visit their restaurants, engage with their staff and their guests, and actually enjoy taking a few minutes to actually work side by side with their employees and actually be part of the team. So the next slide actually gets into from the mind of the emerging and growth chain operator, which is actually an important part of the reports that Kinetic12 put together, or we are putting together each quarter. What we do understand is that data alone will not tell you what the operators are thinking. So there's expanded capabilities into off-premise has changed their business model. So the capabilities have changed where it used to be what we'll call takeout and convenience oriented. All of a sudden, there are multiple opportunities to expand the ability to do off-premise. The other thing that we learned from the minds of these operators was that relationships with suppliers have been strengthened based upon what happened during COVID. But at the same time, because some of the suppliers were not actually working collaboratively during COVID, some of these operators have been much more engaged with new or alternate suppliers.
Yeah, so one of the questions.
Sorry, just a quick clarification question from our audience here. Did you define the emerging and growth chains at 25 to 100 or 20 to 300?
20 to 300 units is where we define them, Charlie.
Okay, thank you. Sorry for the interruption, guys.
Okay, no problem. So one of the questions we've asked is around optimism. We thought it would be an interesting thing to ask these operators, which they tend to have faster growing chains, and we thought they'd be a little more optimistic. It was a 5-box question, sorry, a 4-box question. And in the Q1 report, which was actually, the survey was conducted at the end of December, which if you remember, things were pretty dire back then. We had a top 2 box at 94%. And then the survey we just did a month ago, it was 100% top 2 box. So clearly this is an optimistic group and they have reasons to be optimistic, right? They're set up for success. They've got these differentiated models. They've proven to be successful. I mean, to grow your business from 1 to 30 to 100 to 300, you've got to have something. So we're not surprised to see that, but I think it's an interesting peek into their minds. On the next slide, we've built this word cloud to reflect all of the topics that have come out of our discussions with these operators over the last 6 months. And this is from the most recent study. You can see the top two things, not surprisingly, are labor, specifically sourcing of labor, and supply chain, and specifically I'm being shorted as the pipeline fills up again. If you go back 3 months, those two were not the top two items, topics. The top ones were the ones in orange: menu reengineering, simplification, and off-premise optimization. It's almost as though when March came, the page flipped, business started to pick up, and they had to restaff and the pipeline had to refill. And so these are the two kind of crises of the day. How long we lay last, we will see. We then put together this model, which talks to the 4 key areas of focus for emerging and growth chains that came out of our research, and we would like to take you through it. All right, so this is distilling everything we've done into these 4 buckets, and I think this gets a little deeper into the mind of the emerging and growth operator. The first area is clearly labor, and it's not just sourcing. I know sourcing labor is kind of the problem du jour, but it's about productivity. How can I use my labor better? And it's about engagement. How can I create a culture and keep them here? So as we look at some of the elements of that, there's this move towards hiring special people versus specialized people. All right, so the person I'm hiring is more important than the skill I'm hiring, which gets at this idea of culture and engagement. And I need people that are multifaceted, right? So when COVID hit, I figured out how to run my restaurant with 3 people versus 4, or 2 versus 3. And to do that, I needed people who could work multiple stations. And anybody who's run a restaurant knows that your labor is fluctuating up and down depending on the time of day. And so, you need people who can do multiple jobs. They're also, this group, very focused on continuing their culture. We're going to talk about labor a little bit more, but one of the problems, one of the ways to address labor is by raising the salary or the wage, right? But if everybody goes to $15, the rising tide lifts all boats, and you're no longer differentiated. So you have to differentiate yourself in other ways, and benefits and culture are 2 of the ways we hear people doing that. So that's our first area: labor, sourcing, productivity, engagement.
All right, the second area focuses on menu reengineering and differentiation. And when we first looked at this was really about menu reengineering, and differentiation really has become a major part of it. A couple key points: if you can't execute, don't serve it. In the past, it was about adding to menus and trying to be everything to everybody. Now it's more about execution. If you can't serve it, especially if you can't execute it for off-premise, better not to do it. Focus on what you do well and engage strategic partners to simplify production. So what you're looking at here is a very simple product, but it's a chicken parm. This particular product could be something that is the standard at a particular restaurant, the go-to product. But you can see here that this operator took that product and actually made it into 3 menu items, which is a trend, using multiple ingredients in multiple recipes, or using multiple recipes to create other recipes. So the other thing that's really important, what happened over the time of COVID, we learned a lot that operators were going back to their roots. What got them where they actually were? Was it adding new products, or were there certain products that the consumer wanted? And then, of course, simplification has been something that everybody's been talking about. But of course, eliminating complex production has an impact on the menu, and it has an impact actually on labor as well.
So our third focus area, for the third focus area of these emerging chains is off-premise, as we talked to, and optimizing off-premise for all the, we know what happened over the last 12 months, but in my opinion, what we've seen in off-premise is going to be the single biggest permanent change coming out of COVID. And what we've heard from chains is that they're going to end up at a higher place in off-premise as a percent of the total than they were. So people have said, you know, if I was 40% going in and I'm 65 now, I'm going to settle out at 55. If I was going in at 20, I'm going to settle out at 50 or 35. So we do the math. Think about the math. Off-premise in its forms, right? Takeout, drive-through, delivery, curbside was about 40% of the industry on average. I previously was thinking it's going to settle out in the 47, 48%, but I'm thinking it might even be higher than that. And there are reasons for that. You know, I mean, it can be more profitable if it's optimized and run properly. And the average check is 20% higher, we've heard, not counting the delivery fee, but just the size of the check, 20% higher. The question is whether or not consumers will be willing to pay this kind of premium ongoing. So as we look at, you know, there's a lot of elements to off-premise, a lot of work being done. It impacts all parts of the restaurant, not just the menu, but, you know, technology and staffing. But what we've also seen through COVID is there's been this forced trial, essentially, of delivery apps. People becoming more used to eating at home, food service at home, even more than we were already. And with this increase in the size of order and the success that operators had and the way they've gotten more used to running it, I think is really going to be kind of the next key focus areas for the industry ongoing. So clearly something that's on the mind of all emerging operators. Bruce?
Yeah, so the fourth area of focus has to do with the store footprint and redesign. Operators have been trying to figure out, well, what should their restaurant of the future look like? And three key elements of it is that it needed to be flexible, efficient, and adaptable. Those are three key areas to it. So the next slide shows that as part of our Restaurant of the Future series, Kinetic12, we worked on a design that we believe would take place post-COVID. Of course, you know, we were looking into a crystal ball that was very fuzzy at the time, but we looked at that flexibility, efficiency, and adaptability. And some of the things that we felt were important that we're actually seeing today is that there needed to be multiple off-premise options. There needed to be places for the consumer to be able to get their product the way they wanted it, to be able to order on site and be able to do things based upon their needs. Flexible seating, either based upon the time of the year, so weather, or in general, you couldn't build something and you can't build something moving forward that doesn't give you the ability to offer the consumer what they wanted as far as seating. Another area would be the smaller front of the house and outside storage. Anything to be able to shrink the footprint but make it more efficient. It also includes flexible kitchens. Where off-premise business was just a small part of the overall sales, well, now it's a very large percentage and it's going to continue to be larger. So the kitchens actually have to be set up to be able to handle both the off-premise and the in-house business. And the other interesting thing we took a look at is maximizing space, and that includes parking lots. And I think we've all seen that many parking lots have turned into outside cafes. Well, when we took a look at it, we looked at it not only for seating, but we looked at it for potentially outside entertainment and for other things that could be used to maximize the space and make it so that the consumer was able to get what they want when they wanted it.
Hey guys, just a thought here. And I agree with all four of your tenets that you put together here, absolutely. But give me a sense of where does the sense of customer satisfaction or guest experience, is that going to change significantly, do you think, as we begin to start using full service restaurants and capacity is not constrained anymore?
Well, I can tell you from my point of view, guest experience has changed, what the expectations are. Guest experience for off-premise has actually ramped up considerably as well. The guest experience for off-premise used to be, strictly about convenience. And now it's more about getting restaurant quality food, whether they have it at the restaurant or they have it at home. Within the restaurant space, the guest experience will change as well. The guest is going to be much more cautious. What they're looking for is going to be very, very different. Tim, anything to add to that?
Yeah, no, I agree with you. I think we don't know about dine-in just yet because that's still opening up. But if we look at off-premise, and we've touched on this already, I think off-premise optimization is kind of the next great horizon of food service evolution, right? We'll call it premium delivery. As we've talked before in other webinars, one of the problems with takeout food is food service food is not meant to travel, right? It defies the laws of physics, right? Bread will always soak up moisture. Coffee, beverages will always, food will get cold and beverages will always drip. So how do you solve for that? That's one issue. Packaging will help to a certain degree, but it's not going to solve all of it. It's a food science issue. The other problem is that for many chains, as more upscale chains, a lot of their price is in the environment, the service, the ambiance, the experience. And when you take that out, you can't charge $80 for dinner anymore. You can maybe charge 40. And that's one of the reasons these chef-driven restaurants don't do a whole lot of delivery and takeout, because a lot of their value is built into the experience. So how do you solve for that? People are clearly more comfortable ordering food service at home. They want to do it more. But when you talk, Charlie, about what are their expectations, I think expectations are ramping up. And I think our acceptance of cold food that's run together, that I got to separate out and microwave and eat with a plastic, out of a plastic tray, it's fine when you're in the middle of a pandemic, but that's not going to last long term. So as an industry, we've got some issues to solve, but I think the benefits will be great. So anyway, good question. This is our the model that kind of, just to wrap this part up, talks about the 4 areas that we've heard from these emerging and growth chains that are high on their list. And I would suspect these are similar issues to what larger chains in the top 50 are looking at too. What we wanted to do next is to share with you 3 more questions from a survey that I think you'll find interesting. The first one is around supplier support. The question was, what areas do you want and need suppliers to assist with? All right. So the way this question was designed was there were 15 options. You could choose your top 5. And here are the answers. And you see the number 1 was insights with 57%, which means that only 57% of the operators identified in their top 5. All 15 responses had operators check them, which is good and bad, right? As a supplier, there's at least 15 things they want from you. So you got to figure out which ones you can do and which ones are most important. The insights one is interesting. It came out on top. And this is as much solutions, I think, as it is insight. I mean, that was the wording that was in the survey. So they checked that, but they may have been thinking, I need your help to solve a problem. Right? The second one, supply chain, clearly it's on their minds. And what's interesting when you talk to an operator and ask about supply chain, they answer within the context first of distribution, second of manufacturers. So we're gonna have to think about their answers. What are they referring to? Product cost, not surprising, and then kitchen labor, simplification, and innovation and co-ideation is kind of interesting answer, but there were 15 in total. So I know suppliers out there, you've seen these type of questions before. but I think it's interesting that insights came out as number one. The next one we wanted to share with you was around technology. We asked, what technologies are you investing in, exploring, and upgrading, and looking to invest in? Here are the top 4 answers. I think we had 20 on this list. So the top answer, really interesting, 89% put this in their top 5, which is related to off-premise, just as the second question is related to off-premise. So we need more proof that off-premise is high on their minds, at least from a technology perspective. Here's where their money is going. The third one, e-commerce, obviously that refers to all business. And the fourth one, as we talked about, is an element of employee. It's not sourcing, but it's more kind of engaging. And you know, we're living in a world where a teenager opens their app, they can look at their schedule on the weekend, they can trade shifts, they can see there's a video they have to watch, a new LTO. It's really a way of developing a relationship with your employee through the app. So technology. Go ahead.
I was going to mention, Tim, as an adjunct to this, that this survey was taken in Q1. We've looked at it in Q2 as well. And as you can imagine, labor has really gone to the top because it's not just about training the labor, it's actually getting the labor. And so that's become, critical, obviously. What's interesting about the whole digital app and website technology is that this also is a major part of labor reduction, because I think we all as consumers have done a lot more ordering on apps, paying on apps. So what we're doing is taking a lot of the work out of the operator. We're doing it for them. So if you don't have a good app or a good website, it is hurting in more ways. It's hurting in sales, but it's also hurting in terms of controlling labor. So I just wanted to add that to it.
Yeah, good points. And the last one we wanted to share was supply chain. Bruce, you want to talk about this one?
So this is actually quite interesting as well, because as we know, the supply chain situation has been very rocky at this point. A lot of it has to do with the fact that the whole idea of what happened with COVID is we were flipping the switch back and forth as far as allowing people to come to restaurants and then saying no. And all of a sudden we needed products that actually had to be grown, products that we couldn't just have on a shelf ready to go. So initially, it was all about lowering prices and costs, but you can see the number 2 answer was 76% was dealing with supply chain disruptions. And there are lots of supply chain disruptions right now. And some of it has to do with, again, a lot of the volume that we now have, but there are disruptions focused in on products like chicken breasts. I mean, everybody is doing a chicken breast sandwich today. So how do you get all that chicken? And what do you do with the dark meat? So that's become a major factor and something that ultimately will need to be adjusted. Simplification has taken place in some of these areas to support supply chain issues. So even produce growers may be simplifying some of the things that they're actually doing in order to make sure they have ongoing supply. The other thing about these 20 to 300 unit chains, they're growing in new markets, and they're having a little bit of trouble establishing distribution in some of these new cities. And of course, that means supply chain issues. Can I get the product that I'm getting in markets where I may have 50 restaurants? Can I get the product where I only have 1 or 2 or 3 locations? And then fourth, and again, there's a list of 15 answers to this, but the whole idea of negotiating and renegotiating distribution agreements is a very large percentage, because operators are looking for suppliers who can actually supply the product for them and do it 100%. So they're looking for great communication with their supplier and distributor partners. what can I get? What can't I get? And if I can't get the product, what's the solution? What are my alternatives? So communication and transparency is critical to the supply chain.
Yeah. Good. So those are just 3 bonus topic slides we wanted to share with you. But coming back to our the overarching message of our webinar today is that we're living in interesting times, and this group of emerging and growth chains, which you can look at between kind of the 500 and 200 size range in the list, there's something unique about them. There's something very entrepreneurial about them. And we think they will continue to have a disproportionate influence relative to their size on the industry because of these things. And so as a supplier to the industry, I think it's very important you understand these chains and what's going on with them. And there's a lot to be learned from them. And I know the top 50 are looking at them too, right? Clearly. So with that, we talked about emergence. This is a new report that all of this information has come from through the surveys and through the interviews we've done. We actually now have over 80 chains involved, quarterly reports, and we're looking at forums. So you can reach out to us if you're interested in more. We also wanted to flash up our little graphic, which I think just is an interesting way to look at the industry and the fact that we're living in really interesting times. And it's just so helpful to step back, as you've all done today, and take an hour and to kind of listen to other people's perspectives on the world we're living in and kind of the forces of change that are shaping the business. As managers, we need to invest to understand how our industry and business is evolving. How else can we develop plans and strategies to grow our business? Yeah, Bruce?
And we also wanted to touch again on the restaurant of the future. Something that Tim and I and Kinetic12 have been working on since March of 2020, looking at what the restaurant of the future would be. We've had 8 articles on it, but I think what's most important, of course, is the operators have been doing a lot of the heavy lifting, and it's been based upon the consumer behaviors, that those changing behaviors. So the operators have been pivoting, and they're making sure that they would continue to be relevant post-COVID. And of course, the effect on their supplier partners is basically assessing their needs and being able to have the capabilities and differentiators to support them. So the Restaurant of the Future articles are available for you to look at. And it's an interesting look at basically over time, what have been the key areas as part of the Restaurant of the Future. And again, we still look to what will be the Restaurant of the Future, but we're closing in on.
Good, so that's it for us. Charlie, I'm gonna see if there's any more questions from the group.
University alum and a former colleague of mine, and she asks, what is the outlook for continuing to support virtual brands as things reopen and labor remains tight? So I might reinterpret that question to say, are virtual brands going to continue to be as important, and how do we support them?
Well, what's interesting about virtual brands is it started out as a stopgap. It started out as a way to do business when you couldn't do business before. It also began as a process of filling space. So especially if you're in the casual dining segment, all of a sudden you had these large kitchens with nothing there. Just like anything else, there's going to be a home for virtual brands, but it's all going to become something that we'll go back to something moderate. Right now, it's all about really the hot way to get things going and to be able to maximize your deliveries and your orders. But at a certain point, example, you can only have so many wing concepts as virtual brands. So at a certain point, they will step back a little bit, my opinion.
And then here's a follow-up sort of legal question, which of course I'm going to give to Tim Hand. Are there any legal concerns with virtual brands that may be in conflict with signed leases that have restricted items that compete with other tenants? I'm not sure if you're able to answer that question, Tim or Bruce, but I'll give you guys a chance.
Yeah, that's an interesting question. I would hope that restaurants have done their due diligence. I'm sure that they're making sure their trademarks are available before they go into them. But I would say this, it's hard when you see a trend explode like this one has, it's hard to say whether it's a fad or whether it's going to last. There are many things that could kill it, including the complexity of operation, and that could be one of them. As Bruce said, it was spawned out of a need related to COVID. Well, it seems like a totally logical idea, right? It's basically a self-op ghost kitchen.
Right.
And a natural extension of your business to broaden your reach. And as long as you are adding products that are easy to make, and we've talked to them and they said, we've looked at our existing pantry and we've said, how can we reposition it into a different area? Now, clearly, if you don't have wings, you got to buy wings, which is not that hard to do. So I think the jury is still out, but
it's a tough one. I agree with you. Question for you, Bruce. How would do you believe that an increase in off-premise dining is going to affect brand loyalty? How do you communicate that brand experience and that brand in an off-premise occasion, especially a delivery occasion?
Well, I actually think brand loyalty is going to increase if you're able to execute off-premise properly. So I don't think the consumer at this stage is looking or thinking that everything will go back to normal, or at least to what the old normal was.
Right.
I think you have to make it as easy for the consumer as possible to be able to order what they want, how they want it, and when they want it. So those operators that are flexible and actually can provide the type of experience the consumer wants, whether in-house or off-premise, their sales are going to go up. And from our conversations that Tim and I have had with operators, they don't expect the off-premise percentage to go down. They expect it to be significantly more than what it was pre-COVID.
Yeah. So let me add a thought to that, Bruce. What we've also heard is that a good portion of those orders are not coming through their own website. They're coming through the third-party delivery websites. Some have said it's as high as 2/3 through the other website, not theirs, and some have said it's more down as a third. So it's clearly a mix. So it depends. You get familiar with an app. It's like Amazon, right? I have an app. My credit card's already in there. I know the functionality and how to get through with the least number of clicks. So your loyalty to a degree might be to the familiarity of your app. But hey, if you get a bad product, you're going to move somewhere else. So.
There's a couple questions here about menu inflation. And I know that the three of us talked about this earlier when we were preparing for this, and just we're seeing rising costs because of labor, supply chain challenges, and just general being able to recover some of your lost revenue and margin from when you were closed. There's one person here in the chat says that they're seeing prices in Georgia up, $1. I'm sorry, a sandwich is up $5, a meal's up $8.50. Do you guys see menu inflation as being a new normal, or is this just a blip as we try and recover?
Yeah, I think I'll go first on that, Bruce. I think it's definitely going to be an issue. I think it's already on their minds for all the reasons you mentioned, plus the percentage of delivery going up. As one operator said to us, people are okay paying $30 for a fast casual meal delivered to their house when there's a pandemic. But post-pandemic, if you can go in, drive in and get it for $20, does that premium justify itself? So there's going to be some pressure on that value equation from that side of inflation. But I agree, there's only so much you can bear, and people are going to start to pull back. So that's, I think, as we think about the word cloud, I think price increases are probably going to be a concern going forward for operators.
Yeah, and I just wanted to comment as well, is from the eyes of the operator, you have labor that price, the cost of labor is going to go up and go up significantly. The cost of food we're already seeing up because of supply and demand. Packaging, right now we can't even get the packaging, and so the cost of packaging is going to go up. And then of course there's more third-party deliveries, so there are going to be increases in the consumer being able to dine, whether off-premise or in-house. We just have to see if it's a long-term issue, but in the short term, we're going to begin to see some price increases.
Agreed. A follow-up question for you, Bruce. Going back to menu re-engineering, and I think you used the chicken parm example, with simplification and sticking to customer favorites, do you see this as limiting new menu innovation, new product innovation? And the question here is specifically around plant-based, but maybe you can talk about sort of menu innovation overall, and then what role does plant-based play in that?
I think the whole idea is that the mentality is that anything goes. And that's really what's critical. Whether we're using plant-based or we're using traditional proteins, it's really what you do with it. So it really comes down to bold ingredients that can be used for multiple recipes, products that may not be scratch, but may be scratch starters. So there is going to be a need and a desire by the consumer to have new products, more plant-based. All these things are going to be critical, but it has to be incorporated in a smart way. You can't just start adding products again, bloating menus, because you won't be able to execute. And it still comes down to executing menu items for the consumer to be loyal and to frequent restaurants.
Question for, I'll probably get someone to you, Bruce, because you were the one that brought it up during the presentation, and you mentioned, the expansion of restaurants into the parking lot. And I guess this sort of calls into question, what happens with downtown US, the New York City, Chicago, San Francisco, Miami, Houston, any place that actually brings in a large daytime population that might not drive? Are restaurants going to be moving their stores away from those areas into suburban locations where they do have those parking lots? What is your guys' thought on the future of sort of the downtown daytime weekday dining experience?
It's an interesting question because most of my restaurants back when I had them were in the downtown areas, and there are no parking lots. And there's no question that many brands are already starting to go out to the suburbs, and it gives them a little bit more flexibility. So that doesn't mean that the downtowns, the financial districts aren't going to be able to make things work. But it's going to involve a lot more catering, a lot more off-premise in general, pickup windows that are going to be on the street, and landlords that are going to actually be able to support them with seating. And we've seen that happening throughout COVID, where landlords have been very, very supportive of operators, and in the financial districts and downtowns, they're going to have to continue to do that.
Yeah, I know that Chicago at least has announced a tentative reopening of July 4th. I don't know if that means that, that the whole population that used to come down to Chicago every day, Monday through Friday, is going to return immediately, and just how many of them will return, I think, is going to be a big question as we go forward. Tim, the final question's for you, and the person asking the question actually prefaces by saying this may be hard for Tim and Bruce to answer. So be ready for this one. Conventionally, chains have been a manufacturer direct seller responsibility. With growing attractiveness of the chain segment, how do you see the new selling model of manufacturers working with agencies/brokers in this space, since typically the margins don't allow for multiple touch points? Go Tim Hand.
Yeah, that's an easy one. No, it's not an easy one. The selling model for manufacturers is, I think, something that VPs of sales have always thought about. You know, Charlie, as we look at our next go-to-market program, I think the selling model for manufacturers is high, and the sales structure is high on the list, because it's a trade-off between your direct sales force, your broker, what role the DSR plays, even telemarketing plays. I guess that I don't think I have a clear answer for you on that. I think you will always want to have a direct relationship and a direct, something calling direct on your biggest accounts. That only makes sense. But we've seen a lot of manufacturers move away from their direct sales force for the street and move to a broker because it's expensive. Although the pendulum swings both ways, right? You go away from it, and then a few years later, some companies come back to it. So I think that's, I know this is not a very good answer, but I think I understand why you asked the question. It's an ongoing kind of work in progress. I don't know, Bruce, do you have any thoughts to my vague answer?
Yeah, well, I can be vague too, but no, it's a difficult answer. But I think that one of the things that significantly has changed is the approach to the operator and really understanding their needs, because their needs have changed significantly and they're going to continue to change. And it really comes down to reevaluating your capabilities and how you differentiate. You know, commodities especially, I mean, bacon is not bacon. Cheese is not cheese. It's what makes it different. So the operators are just going to be expecting more. And I think that's what's going to change. You know, how they're sold to, that's a question that I guess we don't know yet, but the approach is what's going to need to change.
Yeah, well, that's a great segue into a couple updates I wanted to give before we close out. And first of all, Tim mentioned it. We are right now bringing in new companies within the IFMA membership to join us on our go-to-market planning program. If you are interested, we are going to be tackling topics just like this. What is the right sales structure to have in a post-COVID world? If you are more chain focused or less chain focused, that's one of the great topics of many that we're going to be addressing as part of the go-to-market planning program. If you have any interest in joining this program, please send me a note, charlie@ifmaworld.com. We also have our next webinar scheduled for a week from today, same time, same place. Focus of this webinar is going to be on marketing in food service, but using some of your in-house resources that you might not even know you had. And so we'll be bringing in a subject matter expert to help us understand how to maximize some of your in-house talent and resources to create excellent marketing programs. We also have Food Service Fundamentals coming up. It's July 20th and 21st of this year. It's an online course. So if you have anybody in your organization that's relatively new to food service, or maybe they came over from retail, I know there have been a lot of hiring as volumes come up. So please make sure all those people get ramped up on how the food service industry works by registering at ifmaworld.com for Food Service Fundamentals. A couple save the dates for you. First of all, August 3rd, 4th, and 5th is IFMA Marketing and Sales Conference. We will be opening registration for that very, very soon. So please make sure to keep an eye out for that. For now, just make sure you knock it off in your calendars, along with, of course, our most prestigious event of the year, which takes place in the beginning of November. And yes, we are going to be in person for IFMA President's Conference in Scottsdale, Arizona. Take out, all those shorts and t-shirts and sunscreen that you haven't used for the last 18 months. This is going to be your chance to take those things out, play some golf, of course, but we're also going to have an amazing agenda of incredible topics and speakers. So we look forward to seeing you in person, shaking your hand, hugging you, doing all the things that we haven't been able to do for so long in Scottsdale coming up. But just to wrap up, hey, Tim, Bruce, Kinetic 12, you always over deliver